Hi there, Serial Trader here. Let's check in with the major indices. So starting with SPX. So certainly expectation before I left last time was for further upside continuation in what would be this smaller degree wave 3, and we certainly went in the right direction there since the last time. Now let me just clean this chart up a bit. No need for some of these things to be here anymore. I'll even get rid of these subdivisions on that small wave too. Okay, that looks a little tidier. So now we either have smaller degree wave 3 in place, and remember this is of a larger 3. If I can just, yeah, so we're looking for this larger 3, and then a larger 4, and then a larger 5, something like that. But let me just get in closer there again. There we go. So we already have this smaller 3 in place, and now we're working our smaller 4. And here, let me just locate that smaller 4. Where did I put it? It's hiding over here. Okay. Sorry about that. Let's get organized here. Okay. Here we go. So smaller 3 is either complete, or this is still just a correction within this smaller 3. Either way, there looks like there should be a little short-term weakness here anyways. And then, okay, so if this 3 is really in place here, we're going to be expecting a 4, proportional one, and we don't want it to overlap with this 1 over here, okay? And judging by the strength so far of this move, I doubt that will happen. And then after that, be looking for a further 5 up, okay? Small degree 5 of 3. And then at that point, you'd look for a larger 4 and then a larger 5, okay? But let's not get too carried away with the subdivisions. Just take it one wave at a time. So I'd say on the very short-term basis, looks like some further weakness here is in play, but certainly nothing concerning from a big picture perspective. And actually, this looks like it's cooperating quite nicely with an impulsive advance to new highs after completing that large triangle there. And just to do a little refresher on where we are overall, this is kind of how we're looking, right? We had this significant peak, and now we've had this A, B, C, D, E as it's labeled here, contracting triangle wave 4, and now we're working, the next impulse wave up. And that certainly looks very much like what's going on at this point in time. And I really think it's appropriate now to just not be bothered with bearish alternates because there's just so much bullish evidence against it. And I don't just mean on this chart, but we'll get to that in a second. So I'll just leave it there as far as the waves go on SPX. Let's go to the candlestick charts. And okay, so here's the SPX candlestick charts. So we're well above the T line, and actually we just closed below the 3 T line, but we were holding above that quite nicely on this strong move up. Now, if I go in closer here, you're going to see we have a bearish engulfing candlestick today, and it engulfed yesterday's and the day before that. So what was today? I think today was Wednesday. So we engulfed Tuesdays and Mondays real bodies, closed near the lows of the day. So that's definitely a sell signal, and we're in the overbought condition on my oscillator. So that certainly cooperates with expecting some further near-term weakness on the smaller degree 4th wave that I was showing back there on the other chart. So if you're already long, this is probably a good time to reduce your position or take profit. And if you're looking to get long, I think we should wait for another entry opportunity here. Now, before I went on my holiday there, I closed my SPY calls just because I didn't want to even have to be thinking about markets while I was enjoying myself, and I definitely, well, it was certainly a profitable trade when I closed it, but I would have made more had I held longer through this up move. But you know what? When you're on vacation, to me, it's just not even worth it. You got to enjoy yourself. You can always trade more when you get back. This stuff's not going away. There's always going to be patterns, and there's always going to be setup. So I really don't care. But I am waiting for the next entry setup here, and expecting some more weakness before we get it. Near term, that is. Okay, now we'll go with the Dow Jones Industrial Average. And the Dow, well, how's this looking? Okay, the Dow is still actually looking a little weaker than the other two indices, but really it'll just get dragged along with them. And I don't put as much weight in the Dow as I do in the S&P 500. It's just more of a complementary thing. It's only 30 stocks after all, even though they are big. So Dow looks like it needs some further near-term weakness. At least come down to touch this T line, or even go below it in a bit of a deeper correction. Now this probably would be the Dow's equivalent smaller wave 1 here, so you wouldn't want to see this get overlapped with this, although we're very far away from that. So similar picture pattern-wise to the S&P, just a little weaker as far as percentage advances. And then, okay, we have our oscillator on the Dow that's overbought and now actually starting to roll over, so that's complementing further near-term weakness. Let's go with the NASDAQ composite. And the NASDAQ, to me, it's why I'm so confidently bullish, big picture, on the S&P. And the NASDAQ, we had our, so the S&P is a contracting triangle, wait for it. The NASDAQ, we had a running triangle, and that's where you have A, and then B makes a new price extreme, whereas in a contracting triangle it doesn't. And then C, D, E, okay, and then we terminated here. And now we've clearly had a 1, 2, maybe a 3, 4, and we're in our 5th of it, you know, what could be considered a final move up, but more likely that this is just an initial impulse wave up of what's going to be a longer, stronger, I suppose, longer lasting impulse wave. But we'll see. After having the correction like this and then a completed 5 waves up to new highs, it's certainly possible that the NASDAQ is going to top, although you'd have to see a substantial decline in 5-wave fashion with a 3-wave corrective advance to really start getting excited about any kind of downside opportunities. But the NASDAQ here, it's making new highs. Clearly this correction was definitely corrective because the NASDAQ already breached its old highs in 5-wave fashion. So to me, the next opportunity as far as the NASDAQ goes, if you want to play, say, QQQ calls or something like that, would be, okay, if we have our 1, 2, 3, 4, 5 up of unknown degree at this point. If we have a nice corrective 3-wave decline, that will be an entry opportunity for being bullish on the NASDAQ. But just to me, the fact that the NASDAQ finished its correction, clearly has made new highs in impulsive fashion, that tells me it's just a matter of time before the S&P and also the Dow confirm and do the same. Tech is just clearly the strongest sector at the moment, as displayed in this strong chart. And then today, if I go a little closer on the NASDAQ, so we had this, well, you can call that a bearish reversal candlestick. Long upper shadow, so a rejection of those higher prices. Although you can't put too much weight in a sell signal when you literally just put in a new all-time high intraday. So definitely you need to see the NASDAQ start closing down below this T line. And actually, if you want to just use a simple support level, you'd have to break 75.95 on the NASDAQ to actually break just this initial minor support level. So NASDAQ looking a little toppy here, short term at least, but certainly nothing actionable until you at least start rolling over and taking out support levels and get this 3-period EMA to cross below the 8 and all those good things. So NASDAQ, if you're long, definitely trim up your position, maybe even sell it all. depending how you want to play it. Certainly wouldn't be buying this. It looks quite overbought. It's not a good entry for a long, even if it does eventually lead to higher highs, which it likely will. Okay, the VIX. And VIX still looks like it's in quite a bullish state for stocks. It really isn't doing anything. Just maintaining its lower high pattern. Basically, every time it spikes up, it just makes a lower high from this overall downtrending look that it has. So as long as VIX stays at these relatively low levels, that's certainly a bullish condition for stocks to be in. All right. Well, that's probably good for now, and see you in the next video. Serial Trader signing off.